Greetings, Algo artisans. Solana is getting ready for the big boys game.
You're gonna see some serious.
In this video today entitled Solana Token Development, Solana Technical Analysis, today we're going to talk about how Solana is trying to position itself to be useful in the institutional game. Before we do that, go ahead and please like, subscribe, follow, hit the notification bell, YouTube and X. It helps us get more content out to you. So let's take a look at this article from DL News. And it's entitled, Solana rolls out 13 new token extensions in bid to lure finance institutions on chain. Now, of course, we're living in a world where Bitcoin now has an ETF. It's been really given the blessing by institutions to do a lot more than it used to be able to do pre-2017. Of course, Bitcoin has been trading on the CME and CBOE since 2017 and has increasingly been approved for a lot of things. And it really is the front runner. Of course, there is talk about an Ethereum ETF, and we have news on that. If you stick around the next few minutes, right at the end of this very short video, we're going to talk about the news we got on that as well. And we actually predicted this news over in Algo Factory several days ago, which we'll talk about that in a minute. However, what's happening here is that Solana, the token itself, is being developed such that tokens built on the Solana blockchain can have features, and I'll just read it right from the article here. The new token extensions add features that normally would have only been possible with smart contract. What that means is that in order for a token to be built on Solana and then have these new features, prior to this development, it would have required those companies that wanted to use a token on the Solana blockchain to have developers to build smart contract. And that's a fair amount of work. It's a lot of QA, it's a lot of testing. So Solana has done development internally such that it's very easy to issue tokens with these features rather than have a company have to hire developers to do that. And that's huge. So many of the extensions will help companies deploying tokens on Solana adhere to their internal compliance processes. Others allow users to make the amount of a token sent in a transaction private. Now, this last one here is interesting. Why would compliance want transactions to be private? Actually, that is a big thing within corporations. That would be a big. We'll get into that, but it has to do with pay, right? So let's move forward in the article here. In a bid to attract traditional business to the Solana blockchain, a series of 13 new features dubbed token extensions give companies more control and flexibility over tokens they issue. Token extensions give token issuers on Solana added features that normally would have been not possible without smart contracts. Businesses can use token extensions to establish specific rules governing who can interact with their tokens. For example, by limiting transfers to people who have passed anti-money laundering and know your customer checks, meaning that you can only transfer money to people who have passed all the AML and KYC. Despite growing institutional interest in crypto, some companies are staying on the sidelines, fearful of inadvertently stepping over legal boundaries amid a regulatory onslaught. In this case, Solana, and I'm not reading from the article here, I'm just keeping it kind of summarized here. Solana went ahead and moved forward and created the option for these companies to use these tokens that might be within the regulatory framework, right? So we'll go into some of the details on these extensions. Of the 13 extensions, 2 of the more important give token issuers the ability to dictate how users can interact with the token or hide how much is being transferred between users, according to John Wong, say it properly, head of ecosystem engineering at the Solana Foundation. Some Solana ecosystem projects have already integrated these new features, including popular wallet providers Phantom and Soulflare, and popular Telegram trading bot and decentralized exchange Fluxbeam. So it seems as if these projects may have actually done the smart contracts themselves, or perhaps they were aware of these features already developed by Solana. I'm assuming that we're already aware of these happening and just went ahead and did it ahead of time. So we'll move forward here. In fact, we'll fix our attention more on the token program here. So token extensions are one of several upgrades to come out of Token 2022, a Solana Foundation-led effort to make development of the blockchain more intuitive and less fragmented. It has, among other things, unified fungible and non-fungible tokens on Solana, ensuring seamless interoperability with smart contracts and wallets within the Solana ecosystem. This does require burning of previous standard tokens and is a user opt-in process, so there are strategic decisions for token creators and users alike. The roadmap includes introduction of further zero-knowledge features in spring 2024, which I believe zero-knowledge does allude to privacy, if you will. So let's move over to the actual Solana development program library. We can look at some of these extensions right on Solana's site here. You have confidential transfers. Why is this important? Well, for one thing, payroll. In a company, payroll should be a private matter. And if you are paying somebody in cryptocurrency, is possibly for everybody to see how much somebody is making, and that can create a lot of problems in the workplace. So, this is something that they would be able to do for such a purpose, right? Confidential transfers are important in business. Not being completely transparent is not always a good in business. Privacy is important in business, and it is important in many, many, many aspects of life. Here's some other ideas here. Interest-bearing tokens, in case companies want to tokenize and perhaps have staking developing non-transferable tokens, NFTs. Actually, those are non-transferable, not NFTs, but that would be NTFs really. But what I think this is about is only one person can get paid. So I suppose that's what that means. Might have to look into that a little bit deeper. There's a few other ones. We have memo required on incoming transfers. So this is actually more for having a company be able to identify a transfer without having to use the hash, right? So just a simple memo, whether it be a verbal memo or something that is just a few numbers like XRP has, and that enables a company to easily reference transfers without having to just, use the whole hash. Immutable ownership, of course, that's where this token can only be held and not transferred by anybody else, which blockchain is all about immutability. So in this case, somebody sends you a token and no one can take it from you. That's as simple as that. So there's a lot going on. Solana is really developing, and I do want to take a look at their chart just so we can see what might happen in the next few weeks. I think Solana, of all the coins, might be near to finding a bottom. There's a lot of liquidity as of yesterday in these 3 lines. So this chart that you're looking at is a weekly chart. Each one of these bars, candles really, is a week worth of price action. And down here, there are a lot of people who have gone long and their stop losses are here. And these are on the leveraged exchange. And we get this data from Kingfisher.io. Extremely handy. There is a free version where this data is available, and then there's a paid version as well where a lot of different data is available, and the referral code is in the description of this video. So go ahead and grab that if you're interested. In the meantime, this makes a lot of sense because price may come down to grab liquidity from where it stopped back on the way up back in November. Okay, so that's around 50 to really $68, and the liquidity itself as of yesterday was sitting at right at 60, also at 65-ish, 66, and just above 70. So decent probability price could wick down there at some point. Now, a lot of what we chart here is going to rely on, as far as projecting out into the future. The farther you go, the less likely it is to be projections because a lot can happen. Traditional finance could take a crash, and it could cause a lot of problems in crypto as well. So far, every time traditional finance takes a hard fall, crypto has fallen with it. Over time, crypto has been great to hedge against such things, but in the short term, not so much. So that being the case, as long as everything remains stable, I do think Solana is either going to range and head up from here, or perhaps either range a little bit lower or simply grab liquidity from these areas and then come back up. So it might simply kind of drop lower and then range lower, or it might have a quick bump down, grab some of this liquidity, and then head up like that. And I think that even on this time frame is pretty realistic. It could happen sooner, could happen later, but I do see Solana reclaiming its high later this year, if not later this half of the year, maybe before the summer, maybe even before March. And once it reclaims 126 or 127, which was its high, I think it's going to approach 145 based on Fibonacci extensions. And if you want to know more about all this and how it's done, please come over to algofactory.tech and we can show you how to do it. This is all very simple. This is not very difficult to do. I know it looks crazy, but trust me, it is not that hard to do. We will teach you, and we'll take our time teaching you. Learning to trade is not an overnight thing. There's no get rich quick in this world. In my opinion, I've never seen one, and I have tried them when I was a lot younger and gullible. So quickly before the end of this video, I do want to talk about Ethereum, and the spot ETF was it's been a conversation ever since the Bitcoin ETF came out, and it has been delayed by the SEC. And this is something that we predicted over in Algo Factory. So this delay, I did say numerous times it was going to be slow walked, right? The ETF would be slow walked, and quite frankly, it's so fast, I'm not even sure they're really interested in the ETF. They may be, they may not. It'd be a lot of money to be made, but they probably want to let the Bitcoin ETF go for some time and see how that goes. And really get a feel for how the crypto integrates into ETFs and into the, call it the traditional finance world. So we did call this out. We called this out quite some time ago, and Ethereum has gone down a decent amount since we talked about this several days ago. If we just take a quick look at Ethereum, and then we'll end this video, the fall from the ETF has been substantial. And again, I just charted this a day or two ago. I do expect Ethereum to either continue to range between 2150 and 2300 or 2400, or it may drop below 2140 and end up down below 2000. Quite likely it would go down below 2000, or at least range in the low 2000s. And if you want more as far as what Ethereum might do, you can look in the past couple of days of videos. I think I charted it a couple of times. So we're looking at Ethereum quite a lot. All right, I hope this was helpful. We hope to see you over at Algo Factory. Remember, come over to www.algofactory.tech. Also, with this video, like, subscribe, notification bell, follow us, follow me on X, all that stuff. It helps us get more content out to you. Come over to algofactory.tech, trade your job, upgrade your life. Alright, hope you enjoyed the show. Please like, subscribe, hit that notification bell. On the screen there you can see our website, algofactory.tech. Tap that QR code to take you straight there. I'm also very active on X, that's algo_factory777. We got TikTok and Rumble. In the meantime, we hope to see you over at the website. Come on over, trade your job, upgrade your life. We'll see you there.